Welcome to today's market report. The Pan-European Stock 600 index ended largely unchanged at 445.20 points after hitting a record high of 447.15 earlier in the week. Germany's DAX rose 0.2%, having hit a record high earlier in the week on news that Europe's largest residential property group, Vonovia SE, agreed to take over its rival Deutsche Wohnen for about 18 billion euros. Deutsche Wohnen surged 15.7%, the most on the Stock 600, while Vonovia fell 6.1%. Europe's wider real estate index added 0.4%, briefly touching a one-year high. Technology stocks rallied 1.3% after their Wall Street peers climbed overnight on fresh instances from US Federal Reserve officials that loose policy would stay. A lengthening of inflation fears saw Eurozone government bond yields edged down for the third day in a row. In the last couple of days, bond yields have come down a little bit, and that has allowed equity markets to breathe again. According to Societe Generale, we're still in a phase where economies are reopening gradually in Europe, and we should see better leading indicators in the coming month. Miners lagged their European peers with a 1.7% loss, as China said it would strengthen price controls of key commodities after warning against hoarding and speculation to cool a blistering rally in prices of industrial commodities. Investors weighed data that showed the German economy shrank more than expected in the first quarter against improving business morale in May, with companies turning more upbeat in the light of falling coronavirus infections and steps towards reopening. Europe's Stock 600 is up about 12% so far this year, largely in line with Wall Street's S&P 500, as reopening optimism lifted shares of economically sensitive sectors such as financials and energy. Heidelberg Cement AG gained 0.2% after US construction material supplier Martin Marietta Materials said it would buy the German company's assets in California and Arizona for $2.3 billion. British rail operator Trainline fell 8.3%, the most on the Stock 600, after Stifel downgraded the stock, citing uncertainty to the firm's activities after the British government formed a new railway operator last week. Crude oil prices edged lower on Tuesday, consolidating after recent sharp gains as traders digest the possibility of additional supply from Iran hitting the global market. Crude futures traded 0.5% lower at $65.75 per barrel, after gaining almost 4% the previous session, while the benchmark Brent contract fell 0.5% to $68.02 per barrel, having jumped 3% on Monday. Gold futures fell 0.1% to $1,983.60 per ounce. On the FX front, the British pound rose overnight, inching back towards the 3-month high reached at the end of last week. Cable has extended its gains and nears the 142 handle amid dollar weakness. Elsewhere, EU's von der Leyen said she's rejected changes to NI protocol. The reason behind the market's less attention to the Brexit worries could be traced from the upbeat mood of the UK scientists as well as the Bank of England policymakers. While the British doctors confirmed finding Indian strain of the COVID and backed the unlock plans, BOE members, including Governor Andrew Bailey, hinted at tapering to justify their latest moves in Monday's testimony. Also positive for the GBP-USD bulls could be the preparations for the UK-Indian post-Brexit trade deal negotiations, as well as the US dollar declines. Sterling, which has run up about 1.2% over the past 3 weeks, while other majors have steadied or even slipped, was 0.2% higher at $1.4179. Data already out this morning showed public sector net borrowing coming slightly better than expected at 31 billion from the expected number of 32.9 billion. Eurodollar is holding the higher ground above 122 after German GDP was downgraded to minus 1.8% in Q1. European Central Bank President Christine Lagarde shrugged off the expectation of winding up the bond purchasing program, while the US dollar floated at the bottom of its recent range on Tuesday as softer than expected US data and fresh insistence from Federal Reserve officials that policy would stay on hold allayed investor fears about inflation forcing interest rates higher. The US National Activity Index reading of 0.24 against expectations above 1, as well as dovish comments from the Fed speakers, provided some backing for the view that any policy tightening is not happening anytime soon. The dollar index was down 0.1% at 89.735, hovering above a 4-month low. This is today's market news. Thanks for listening. We'll see you next time.